Thank you, Mark, for the introduction. The challenge for the next 30 minutes for me is that I should be able to tell you something that you don't know, but I'm convinced that you know everything. So this is really a great challenge, and I think there are a couple of things that I might be able to highlight or give a candid answer that you can carry with you. We attended in March 2014 conference at Cannes, France. That was the largest international real estate conference. And last month we were in Dubai Cityscape conference, which is also a forum where over 100 countries are represented and about 20,000 participants were there. And I was looking at variety of people who were coming to various booths, and we had a Canadian flag there, and people were coming over there too, in great demand for real estate as well as immigration. So we said we are not the people who give immigration, but queue up was to give them immigration. So I was just looking back that in 15 years, what people used to own and feel proud was gold, silver, these kind of commodity people were taking, and now it has come the real estate and stock market. So if you look today, what are the forums and what are the avenues available to people to invest? The topmost I feel is real estate, then comes the stock market. I am not able to identify any third avenue where people can invest in big deal. Globalization, internationalization, and securitization, that has really paved way in real estate investment by people all over the world. It is very easy for them to invest in real estate investment trust. They can be traded on an everyday basis. And people sitting in Australia can buy in Canada, or Canadians sitting here can buy in Dubai, and Russia, wherever all over the world. So that has made it very easy for people to invest. Now, where this market is going and how the fundamentals are working, how long this will keep on going forward, and what are the items that really can impact the real estate. So I've been able to navigate on these items. And the most important segment in here is interest rate, which is very, very important and really takes care of all the values that are coming for commercial, industrial, and residential real estate. Now, the peak that we see today in 2014, for instance, I was looking at numbers in London, England. So it has already surpassed 2007 peak, which means the impact that we saw in 2008, that has been taken care of, and today prices have passed that 2007. Real estate prices in Dubai, for instance, have also peaked. So 2008 is already gone. So we are seeing the new heights. Similarly, except Spain, even prices in Brazil, in US is coming up, and in Canada, definitely they are at the high. And we have to really project as what we see going forward or in the future, how it is going to happen. Now, funds in Canada, particularly the pension funds, last year in 2013, in the US, there was total $33 billion investment that came all over the world. To US, and if you look the numbers, 11 billion came from Canada. So which means, and you can imagine that 30% of investment in the US came from Canadian. And I was talking to people, the US group that came in Cannes conference, and they said Canadian funds are flushing money and they are buying all over, and they are a particular focus on, say, they are buying in San Francisco and Manhattan and Chicago and all the buildings, commercial, residential, and industrial. So that is the profile that Canada has. Now there is also a very important fundamental, and that is any unrest in the world at this point who are the beneficiaries? In my opinion, there are two countries who are the beneficiaries. One is Dubai and two is Canada. Why Dubai? I'll say number one is that it is easy to get into Dubai market. No question asked where the money is coming from. There is no tax, property tax or income tax, so people find it easy to get into the Dubai market. And I'll give you some example because I was there very recently for about 2 weeks, and we also tried to launch one of our projects in Grimsby over there. Why Canada is a destination is that Canada is the most wonderful country in the world. People get all the education, environment, health, nice place to be around. So this is a preferred destination, but obviously a lot of questions are asked, rightly so, and we want to go in a very disciplined manner. But anywhere, anything that happens, these are the two destinations and they will continue to grow. In my opinion, they'll continue to grow in the next 20 years, 30 years. And I will also try to forecast you how the interest rate will go and where they will go even up to 2050. And I'll give you a very candid answer about that. Because when you go sit down, I'm sure you read all the articles, when you sit in conferences, people coming from the economists, from the bank, and when they really describe how the interest rate, their vision doesn't go beyond 6 months, and lot of, it depends on this and it depends on that. So when you really exit, you are confused on what is going to happen to my investment. But I think we can really go in greater detail and how this is going to happen, why these are at a low level, and why they will continue to be on low level. So let me take this interest rate up front, because right now, who really control that and why US in 2008 straight away went to 0.25% interest rate? I think that was the most wise move that the US Fed had done at that point in time. And the result of that decision, you can see here that in 2014, what has happened? The stock market, which touched 7,500 level, and the lowest was about, I think, 6,700 back in February 2009. And today, 5 years down the road, it is 16,500, touched 17,000. And nobody remembers 2009 numbers. The interest rate goes down to 0.25% upfront right away. They did not think that, okay, gradual decrease like Europe. So I'll compare with US with the European decision making. So the money supply and the stimulus available to people and the cheap financing encourage people to invest, because if you take money and invest 0.25%, 1%, 1.5%, your rental proceed that come, that gives you a return of over 3%. So you are making more money by investing in real estate than keeping money in the bank or anywhere, because it has no value. Take an example of Japan, for instance. The past 20 years, the interest rate is 0%. No big deal, nothing has happened. The real estate is booming there. Average return in Japan on commercial industrial property is 3% on the rental basis. So if you take that 0 interest to 3%, why people should not invest? Their real estate is booming for the last 20 years. Similarly, in Europe, what happened is that the ECB, because it's a group of 17 countries and the decision making was difficult for them, what US was able to do was to print money, keep the money supply, give them a stimulus, and everybody had a cash available to go into the market and stabilize the economy. These steps were taken to stabilize the economy. And the Europe, because the senior partner is Germany, and they were not allowing to go printing euro all over to give to 17 countries, because they have to see balance of payment of every particular country and all the, the various segments that they have to control, keep deficit financing and stuff. So they delayed their interest rate decline. As a result, after 5 years, they have realized that they will never be able to recover from the impact of 2008 from the economy. As a result, now they are gradually reducing the interest rate, whereas the other countries are thinking of increasing. So if you see the Europe, they will start in next couple of years a recovery path which US had already started from 2010 onward. Now, how it impacts the interest rate to the real estate market, particularly in Canada and North America. I have a feeling that this money supply will continue like this. The stock market and the real estate both go hand in glove, because all the top funds, they are heavily invested into these two. Now, if they do not invest, there is no way to generate more income. If they cannot generate more income, they are unable to meet their obligation. People are retiring. Now, if the people are retiring, you need money to pay off to them on a monthly basis. Now, so you have investment in stocks, you have investment in real estate, and if the return is not coming, you are in a big trouble, and none of the government is going to allow. With this 2008 debacle, no government anywhere in the world is going to allow that to happen, that kind of episode to reoccur what has happened in 2008. Why? There is a new system that has been evolved, like for instance, there used to be G7, there was G20, there were head of states were meeting, having discussion, and the finance minister used to have a meeting and make a policy which goes around the world. But a new phenomena has come, and which means the central bank governors or the head of the central bank in all emerging markets and the developed market, the 27 countries, they are on hotline. And they are the ones who are now the biggest policymakers. So if anything happens in, say, Argentina, then these people picks up the phone, all the 20 countries, they talk to each other and take action that in the morning when you wake up, everything is already settled. Rather than having meeting of all the head of state, which would not happen, reaction time is needed to arrest any negative impact in the market. Last 3 days that you have seen in the capital market, like stock market was going down, there was nervousness. People were looking around, what is going to happen? Because after impact happened in the stock market, the next is the real estate, because there's a margin call, you disinvest in the real estate. But you have seen that after 2-3 days decline, the market has started stabilizing, and there was an increase of 300 points. What has happened? What big deal has happened? Nothing has happened. What really happened is that these are all managed economy. They're not freestyle economy. Every economy in the world is now managed by central banks. And this system will continue for a very long time until we see a real stabilization and coming back. And I think this system is going to work, and this system should work, because as I said, a person sitting in Canada is investing in Japan, in Australia, and South Africa. So he has interest globally. Not that his interest is only focused in his particular country. So these are internationalization, as I said, securitization, globalization. So all these actions are all coordinated and taken that. Now, coming back to the interest rate, the biggest decision maker in the whole game is the US. Now, US has a debt of $17 trillion. Now, it is not at all in their interest to increase the interest rate from 4%. If they do, their payout is very, very heavy, and they are unable to meet that. And it's not at all in the interest in the Fed and capital markets to go back to that era where interest rates are quarterly adjusted. Now, for instance, there are meetings of the Fed, and any member of the Fed making any small statement about a possibility of interest rate increase, the stock market goes down. You can see and track down what has happened in the last 1 year. Maybe it is done purposely or whatever, but the stock market adjustment is purely linked to that. So the moment a a clue comes that there may be a possibility of interest rate increase, the stock market goes down, and then everybody comes back, calm down, calm, it's not going to happen. It is the stated policy of the US Fed since 2008 that until 2016 there will be no increase. Now, I strongly feel that until 2020, the interest rate will remain where they are, because we are in 2014 and 2016 they say it will not go increase. Why it should increase if it has not done in, say, Japan, or even if there is an increase, like let's say example, we have 0.25%. How much increase can happen in the interest rate? If you say increase it by say 10%, what does that mean? It's 0.025%, which is nothing, it's insignificant. But if you feel that interest rate can go up by another 0.25%, that means the increase is by 100%. And nobody can allow 100% increase in the interest rate, regardless. It is not going to happen. So, my really a candid answer is, and comfort, that interest rate will continue to be low for a very long time to come. And until 2020, it's very clear that this is not going to happen. So if that is not going to happen, the real estate market will continue to grow at the pace that it is concurrently here. It is not going to go down. Why? Because the money supply is there, affordability is there, mortgages are available. Where money is going to be invested? As I said, stock markets, everybody is not an expert in stock market. Real estate. And you know, one wise man said that God has stopped making lands anymore. He's making people. Wherever you want to invest in real estate, that's a good thing. And now people used to ask, oh, you have a gold or silver. Now people say you have a real estate. Yes, everybody owns real estate. And young people, retired people, everybody has a real estate, and that is giving a lot of growth to people and increasing the wealth. Now let me compare real estate. We'll come back to Canada, in Dubai, for instance. In 2008, they had a tremendous problem because it is unregulated market. Everybody all over the world, they come and invest in Dubai, and there is no rights, there's no bankruptcy law, there's no condo co-ops situation. So where the money is coming from, and when we were in Cityscape last month actually, there was 20,000 people who visited in 3 days. They were Russian, rich, Chinese, and Africa. So all these people were coming big time, investing in Dubai. Here, for instance, in Canada, if somebody wants to buy 2 condos in one name, here real estate experts are sitting, you have to really declare that I am buying 2 properties in one building. And the lawyers have to scrutinize that, and they have to certify to the lenders that this gentleman has bought 2 properties in this particular. Over there, people come, they buy 6 floors. One man buys 6 floors. Now we were there and we had a Waterview condominium phase 2. We launched there, and a Nigerian gentleman walked into me. He said, how many condos are total? I said, we have 9-story, 72 condos. He said, okay, what is the price? I said, 1 bedroom in a den is roughly $300,000 Canadian, which is about $1 million Dubai currency. He said, that's very cheap. Can I book 6 floors? I said, what do you mean by 6 floors? He said, I want to buy all the 6 floors in one name. I said, we don't do it like that. He said, why in Dubai we buy 17 floors, we buy 10 floors? And why it cannot happen in Canada? I said, no, this is a very regulated economy, and we are very transparent. Everything has to have a due diligence. The source of money has to be identified. All the process has to go through a trust account. So there's a lot of rules and regulation, and we make sure that our investor is well protected. And that's why I said you haven't seen anything in 2008 that happened in the rest of the world. So he said, yeah, this is something that we want to, we recognize, and our investor really wants to go to Canada to invest because the market is very stable, and but we want a big time situation. Now, while we were there, and these Arab Association, they told me that there is $100 billion investment is going in the real estate in next 3 years from Middle East. Out of that 100 billion, 28% is coming in North America, US and Canada, Canada included. So if you can imagine, even 5% of 28% that's coming in North America, you can imagine the volume of money that is coming in Canada. And the focus is mostly on the GTA in Toronto area for a variety of reasons. There are people who are already qualified and approved as immigrants but coming in a phased manner in different provinces in Canada from China, and each one has at least $10 million to invest here in the real estate in GTA. So the money supply that is coming from all over the world and to Canada market is very small comparatively. Our contribution to the world economy is only 3%, which is not significant at all, but it's very open economy. People understand the living standard, living condition, education facilities, medical facilities, environment. So that is their preferred destination of Canada. 250,000 people are coming every year as immigrants. Most of them have a destination in GTA or Toronto, Ontario area. The housing, the condos that is going up does not match the demand which is coming and coming forward in the next 10 years that you will see. Prices are still cheap. If you compare the prices in London, in all the financial capital of the world, Australia, France, Geneva, New York, we are still the cheapest. And this is a significant thing for people to invest here, because look at the vacancy rate, what is happening here. Even if the development is going on in the GTA and people 5 years down the road were saying a lot of condos are being built. Yes, they have been built and have been accommodated, like they are rental, even if they were investment properties. If you go on the roads going west, we haven't seen 3 years ago the amount of traffic that is going to Grimsby, past Grimsby area. We have started our development in Grimsby. There was no building ever built in Grimsby. We are the first one to do there. 9-story phase 1, facing the water view condominium. We launched on May 3rd. In 4 months, we have sold 70%. We are now launching phase 2. And the builder around the area, they came to me and they said, who are the people buying? I said, they are all end users. What is happening is, people have money, they are getting age, so our mostly buyer are 55 plus, who wants 2-bedroom and a den or the penthouses. They wanted to downsize. They have house on the lake or around the area, but they were looking for an opportunity where they can get a very good building, where they can house themselves. 3 months they spend Florida, rest of the time they'll be here. But they don't want to move outside the Grimsby area, because that is the place where they want to be around. So there are regional economy around there. There are small city, Welland, Hamilton, other small towns around there. And they all wanted to see is something that is coming up in that area. So our development when it came, because it was the first one and it was facing the water, so people have a lot of liking, and we sold 70% in 4 months, which is outstanding, And similarly, our phase 2 will be launching. Our team is sitting here. They are planning for March execution, and we are very hopeful that that will also go. But our response, just to share experience in Dubai, was that they had a lot of liking for that project, and in March we have a waiting list of about 30-40 people who wants to invest there as a second place to go there in the summer and spend some time in Canada. Now, there is a fear that whether the increase that continues to be gradual increase in the real estate market will continue to be like that, or is there is a bubble that is coming up. Let me assure you that there is no bubble in the real estate here at this point in time that people should worry about. There are all sets of people, and how they look at things is if the half glass is full or half empty. You will have people who will say the economy is very strong, everything is moving well, but there will be people who will be saying no, there is a bubble that is coming up. Everybody has his own view and own way of evaluating things. But what is the realistically situation that appears to be, as I said, if the policies which they are, the financial policies as they are, the real estate is absolutely firm, it's going to remain stable, and we do not see any correction that people should be worried about. The growth that is going about 5%, 5.5% will continue for some time to come, like as I said about 2020, that we feel strongly, and that is how we are planning for our growth, that up to 2020, if that continues, the prices will remain stable and there will be a lot of interest from people to come and invest in Canada and have this as their place of residence. Overall, worldwide that I see, starting in all the developed world and China, for instance, we were in China a year ago and we saw the real estate over there. There is no comparison or imagination what is happening over there. And China needs another 30 years to really develop full scale for all their population of over 1.2 billion. Look at the prices, what is happening in India. They are also over 1 billion people. All the rich Indian from here sending their money over there, but the real estate prices over there match any Western world. And it's affordable, still it is affordable. So, as I said, that because of this globalization, securitization, the investment avenue is great, and people will continue to invest in real estate, and Canadian market will continue to be stable, and there should be nothing to worry about the bubble or anything else coming forward. So that was, just my views sharing on the international real estate. But if you have any specific questions, I'll be, welcome to really address if you have any particular question on Canadian market or international market.
Sure.
Yeah.
So you touched base on the China scenario. Are you saying that international investment is being allowed by the Chinese government into development of their residential infrastructure? Or is it commercial that you're most interested?
Right. The real estate that's going in China law is mostly for their own people.
Right.
Right? Because of rural population moving to urbanization. So they are really taking care of that. They need every 3 months the size of Toronto they need, that is the requirement, there's the indigenous requirement. The law does not, is not that easy for international investment. Should that happen, you can imagine how much people will go. People are going from Singapore, from Malaysia, because some of the cities they have dedicated for them, and those industry is going there for particular, product are made and manufactured there and transported back. So those people are, investing there. But once they open up and the laws are made very convenient for people, there will be a lot of investment going there also.
This is my understanding. Most of the international investment is in the form of production, like commercial facilities and such things, right? So there's another question just to tag on, though, which is I understand that certain areas of China are facing a little bit of an economic crisis of sorts because they've built empty cities, which the indigenous population cannot afford to populate. So they've had investment from their local nouveau riche into the infrastructure, and yet the local people are not populating these buildings. Do you see a solution for this? Or?
This is a situation, and that's not a very recent situation. In fact, last 5 years when this was found out that how many banks they wanted to understand what the kind of loaning is there, what is the bad debt of those, where the money supply is coming. Because once they build 200,000 without, really looking at the requirement, because they understand that there will eventually be a requirement for those and they want to build it in one time. I went to the hotel with 2,000 rooms. It's average 2,000 rooms. You go to a restaurant, it can take about 1,000 people. That size is mind-boggling. You cannot imagine how that is coming. But you see, the transparency is not there, so you can't really figure out how the bank's money is being. You're right. Yeah, that's there. Yeah.
Well, thank you for answering.
What do you see as the biggest risk in the next few years?
Very good point. You see, the biggest risk that I see is unrest in Middle East and Ukraine. These are the two items that I see. But if I link this, like a lot of articles are coming these days about oil pricing. The oil pricing will go 75. Some people are start talking about $50. That's not going to happen. As you see the risk, there is a risk in the Middle East, there is risk in Ukraine. One incident, small incident, anywhere in the world, the pipeline or oil producing country, the price jacked up. And currently, this is the only risk that I see that in the Middle East unrest, but you see the US and the allied, they are committed to keep the world pace, and you have seen how coordinated actions are being taken for ISIS in Syria and Iraq, which is very reassuring for everyone that there will be a stability and there will be calm and peace in the world.
What's your thoughts on investments in Africa?
Where?
Africa.
Africa. What are your thoughts?
Africa, yeah. Africa is one region which has not seen growth in the past 100 years. There are a lot of resources over there. People are traveling all over, and a lot of investment that we have seen from China going over there, Russia going over there. I think Africa has a great potential to grow. And that is going to be the biggest area and destination for investment and growth. That is, I strongly believe in that. They have to just manage their resources. That's the only thing. Yeah.
You had mentioned something